In a recent video, I talked about how I was investing $5 a day and turning it into over $583,000. Now, in the background of that going on, I've got some other investments that have me pegged to retire with well over $3 million. And I'm going to show you exactly how I'm doing that. Now, let's jump in. Now, first and foremost, to get the most return out of your money, we need to understand what account we're going to be investing in. If you've heard of a Roth IRA before, skip ahead. But if you haven't, this is very important to your investment success. So the way that a Roth IRA works is very different than a traditional investment account. When you open up an account on a brokerage, you'll know because you have to specify if you're opening a Roth IRA. And I would highly recommend that if you haven't looked into it, I'm going to have some resources in the description. It is probably the best investment account out there. And because, well, let me explain it to you. So when you open a traditional investment account, here's how it works. Let's first break down how you're getting money into the investment account. Well, the first thing is you're working your 9-to-5 job, you're getting paid for your time, and so you receive a paycheck. And usually in that paycheck, you're paying income tax, there's tax to the government, and it's deducted from your paycheck. So you've already paid tax once. And then you're investing into the investment account. Now, while that money is growing, maybe you receive a dividend payment. Well, the government looks at that like it's additional income that you've earned, so you're taxed on that. Or if you go to sell your investments later on, let's say you invested $1,000 and then, 10 years from now you decided to sell and it's worth $5,000. Well, the government's going to look at that $4,000 you earned and they're going to make you pay capital gains tax on it. Now, here's where a Roth IRA comes into play. You see, the way a Roth IRA works is I receive my paycheck from my 9-to-5 job. I've already paid money to the government. And what goes into my investment account is then going to grow completely tax-free. If I don't sell and I retire at the age of 65 and I start withdrawing from it, I'm going to pay no additional taxes on any of that money that's grown. So you basically put it in this account, you let it sit there, and it's going to grow over time completely tax-free. There are some stipulations, like you can't contribute more than $7,000 annually. And if you have an adjusted gross income of over $138,000, which, let's be honest, if you're watching this video, you and I probably aren't at that point quite yet. And also there's just a couple extra rules alongside of it. Now I'll link everything that you need to know in the description of this video. So now that we know that we're investing in a Roth IRA and the advantages that come along with it, let's take a quick look at what's in my Roth IRA currently. First things first, I'm in the M1 Finance investing application. Such a great application. I'm going to have my referral link in the description of this video if you want to open your account in this. But anyways, just jumping in, you can see this is my Roth IRA. In this account, I have $14,939 and it's up nearly 27%, approaching 30. So it's been pretty good since its inception. Now, in this account, if you guys know me, then you know that I am a really, really hands-off investor. I'll put it in the stock market, I'll let it do its thing, and I'll just watch the growth from afar. I don't want to have to be in there actively managing it, worrying about if prices are going to crash or dip in certain stocks and trading and all these different things. I like to just put my money in there, let it go to work, and then forget about it. Because on average, when you invest in that way, you're going to get returns similar to what the stock market is producing if you're investing in, ETFs or market tracing ETFs, things like that. And on average, you're getting around an 8, 9, 10% return from the stock market. And actually, let me just jump back in here and I'll show you what my breakdown is. Just a couple different investments in here. And it's kind of a work in progress. I might actually tweak this, but looking at where I'm at, I'm investing in SCHD, which is my very favorite dividend ETF. And dividends in this account are great because, again, you're not paying taxes on dividends received. So I have $7,455.20 invested in that. And so I'm going to be paid dividends that are then reinvested into this account. And I'm not paying taxes on it. So it's awesome. Then I have something that is called VTI, Vanguard's Total Stock Market. And that's more of that market tracing ETF. This is the largest percentage of this portfolio. That makes up 55% of this portfolio. And I'll probably reallocate to be a higher percentage here in the future. And then the next thing that I'm investing in is Vanguard's Total International Market, just for a little bit of that additional exposure to stuff outside of the, traditional NASDAQ, the stock market. And then the last thing I have in here is QQQM, Invesco's NASDAQ 100 ETF. That looks at the 100 biggest companies on the S&P 500 that aren't in the financial sector. And, that's one that I recently put in here. We've seen some solid growth opportunities from that in the past few years. I just wanted some exposure into that. But honestly, I think that if you're just getting started, and what I would tell myself and what I'll probably end up doing in the future is just really targeting where I'm getting the best return, tracing the market with that ETF, BTI, or one that's similar, and just letting the market do its thing. Because again, I don't want to be in here and actively managing it. I'm just going to let my money grow. And this is how I'm going to get us to well over $3 million by the time I retire. And let me show you how that works out to be. My strategy right now is that the max contribution you can make into this account in 2024 is $7,000. So if I take $7,000 divided by 12, I'm going to figure out how much I need to invest every single month. And that's $583, $584 if you round up, every month in order to hit that contribution limit, which is what I'm going after. So as I go back to my Roth IRA, you're going to see I'm going to transfer $584 into this account. And just like that, you can see it is going to go and automatically be allocated into those funds based on how I've previously set it up. So the strategy is that every year you can max out this account. If you make enough income and you're able to save and invest, this is the best place that you can really put it if you're already getting your company match in something like your 401k. So that's exactly what I'm doing and why I just put the money into the account. So from here, it's pretty easy to see what this money could turn into. You can see the starting amount, what I have in my account right now is $14,939 and 40 years of growth. Then when I retire with an average market return of 9%, which is a little bit conservative. Usually it's up around 10%, but we'll just say 9% here, compounded annually, making additional contributions of $584 at the beginning of every single month. Let me click calculate. You could see that money then grows and turns into $2.951 million. Factor in the $5 a day I'm investing in the other account. We're up, $3.4 million. So it gets really crazy. Now, if you are able to not touch something like this, let's say you are making enough money, you can max this out, you start investing in other ways, you don't have to touch this money, you can continue letting it grow. That's where things get crazy. You can create things like generational wealth. And in an account like this, which obviously it's a Roth IRA, it would have to be transitioned out at some point, but give it 100 years to grow, this turns into $533 million. So if you could somehow do something like that and create this everlasting wealth for your family, I mean, that's so crazy. I'd love to be able to create an account that I don't even know if it's possible, have rules and stipulations that my kids can't touch it and you just kind of got to let it grow over time. Obviously there's no way to enforce that when you die, but it would just be so cool to have something that people contribute to constantly, and then you can grow that money and change the future with it, I guess. I don't know. Maybe that's me just being a wishful thinker, but that's just kind of where my mind goes. So the other thing is, you might watch this video and be like, there is not a chance that I'm able to invest $7,000 into something like this every single year. And that's perfectly valid, right? Some people are going to have some income restrictions or a lot of expenses, and I'm in a fortunate position where I'm able to, shell all this money away. And obviously that's going to be something that's a bit more challenging for some other people out there. Just know that when you're looking at getting started investing, an account like a Roth IRA is one of the best possible scenarios, one of the best accounts you can go with, especially if you don't really need the money and you're going to let it grow over time. Now, I'm going to link a video that I have in the past that talks all about Roth IRA investing and why I love it so much. Just so you have that as a resource. Again, there's stuff linked in the description below. If you made it this far into this video, it would mean a lot. If you liked the video, get it out there on the YouTube algorithm, because we are going to become millionaires together. And at the same point, I don't know what my parents were thinking. They could have handed me $544 million at some point, and that would have been freaking fantastic. But I guess that I'm going to have to be the one with the foresight to think through that generational wealth component, just like you. And yeah, we're going to get there one day. Thanks for checking out this video, guys. All right.